Earnings are a little bit, revenues are better than expected.
So where do we go from here?
So, Scott, it's interesting. You know, a month ago, at the beginning of this month, it looked like all was lost. We were about to go into a negative earnings report. We had a hard Brexit on the horizon.
Earnings have been negative, right? Earnings growth is negative. Let's not say it's something it's not.
But it's hard to make the case that you have a negative earnings environment when top line growth is positive, especially ex-energy. Typically, if it's buybacks and all the financial engineering people like to talk about, if that was the negative, Scott, top-line growth wouldn't be up. Where you really want to be worried about we believe that we're coming out of the third mini-recession of this cycle, similar to the post-2011-2012 European debt crisis, similar to the Asian commodity crisis of 2015 and 16. And in both of those occurrences, the S&P made a low months before the 10-year did. Defensive stocks led into the 10-year low, which so far is September 3rd, and then it was offense. So we're on offense. Our target is 33.50 front loaded in the first half of 20.
Are we pulling some of that forward the higher we go into the end of this year?
You could be. You could. It's been listen, it is stunning to me. It blows me away that the Barron's Big Money poll has never been below 38% bulls. It's at 27% bulls.
We mentioned that yesterday on this program.
It's extraordinary. The only times that you got to 38%, according to Jason Goldford at Sentiment Trader, 1999, 2005, and 2016. You were up 6 and 12 months later for all three. It just blows me away.
So how do you get that sentiment, that this negativity, to shift
price
and push closer to your target?
There's only one answer to that question.
Everyone's sentiment improves when price goes up. Everyone's sentiment deteriorates when price goes down. I want to point out a couple of things that I think are important here. A lot of the things that we were worried about have now resolved themselves to the upside. And I'm not talking about headlines. I'm talking about sectors in the market. Let's look at regional banks. They are now at the highest level since August. Notable. This is where credit flows to small businesses and regular people. These aren't Wall Street banks. But let's look at Wall Street banks as well. XLF, breakout, new 52-week high, phenomenal, highest level since September 2018, up 30% off the December low. Notable. Now let's turn to industrials. We're all worried about manufacturing recession, et cetera. The industrials are right at the peak of this horizontal resistance they've been sitting below all this time. That could be a monster breakout to new highs. Look at some of these names individually. It's already happening. 10s minus 2s. In August, we had the yield curve invert momentarily, but still it did. That's been steepening ever since. We're now at 20 bips. What else do you want? Yesterday, you had very quietly Google make a new 52-week high. Apple has added $90 billion in market cap in the month of October alone. Small caps have been rallying furiously. So a lot of these things that we've been concerned about, they're resolving.